Good morning, everybody. Eric here with you on this Friday, March the 2nd. We're about halfway through the trading day here. It's about 11:23 here in the Central Time Zone, so I just wanted to give you all a midday update, kind of talk about what's going on here. We've been against this market, shorting it, so it actually worked out very well for us. We've been shorting in this zone up here, and once we kind of rolled over, I took some of the money off the table yesterday just because it had done very well, and then I went ahead and took the rest off this morning. Just the way that we kind of opened out of the gate and started wanting to rally. I didn't want to let those profits go to waste or anything. So as you can see right off the bat this morning, we can just go to an intraday chart here. This is actually a 2-day chart. So we opened a little bit lower this morning and looked like we were going to dive off there. But then the market kind of started getting some momentum. And once we started setting these new highs and holding, this was my cue to go ahead and take the profits off of those short positions. Even so, I still do have some short exposure, and I'm actually adding to it. I've got an order set up right here to short, and instead of using the S&P, I'm going to go with the NASDAQ this time because it has outperformed the other markets. So I think it'll have to play catch up to the downside a little bit, and we can check it out here just real quick. So I think that it'll be a good way to kind of bet against, just because, like I say, it's kind of up at levels above. It's held up a lot better than the S&P 500 has, to say the least. So it is trying to peak above its 50-day moving average right now. I do not think it ultimately holds. It may for today, but I don't think like next week it will. So back over to the S&P though, and you'll kind of see why I'm kind of maintaining this. So we actually had our moving averages cross back over to the downside. We now officially have a lower high in place with this one right here, as relative to this one, and we have our first lower low, and this one, whether or not it becomes a lower low or it does not, is yet to be seen. I went ahead and added this 100-day moving average because it had been getting talked about quite a bit, so I just wanted to go ahead and add it on there for y'all to see because it is coming into play. It's pretty much, it fell right to that, and that 100-day kind of lined up with some of these other retracement levels. And I've kind of marked them there, the gray, the orange, and the blue lines there. So that's probably why we're getting the bid today. I don't think it holds. I think we might kind of bounce back up into this 2700 area and then resume downward. So I will reiterate my call that we need to be bearish and we need to be selling into this strength. And like I say, today's market, just because we're starting to rally, and like I say, we do have a buy signal on the 15-minute starting to get close. It may trigger, and I think that would kind of be a false breakout. It's already triggered on the 5-minute chart here. We had the moving averages cross. We took out the high, and so that was kind of my cue to jump out of the short position because short term, I think we're headed higher now. Like I say, I just got to reiterate very strongly, I think you need to be a seller, not a buyer at this point. So there are a few things that we can look to buy, and I will show you a couple of them here. One of them I saw today, and I've already jumped in. This one is at McDonald's. It had a analyst, I think it was RBC Markets or RBC Capital, came out and downgraded the stock, and they lowered their price target from 190 to 170. And they tried to quote the dollar menu wasn't as strong as what they thought it would be, yada yada yada. I think ultimately this is a demonstrated company that has, they've weathered a lot, and even in the face of like health trend changes where people are going a little bit more natural and organic and less fast food, they've managed to remain extremely profitable. And it's not a super fast grower. They do have a very good international growth story, but I think that this is one that you can play from a long-term perspective, and you can go ahead and start dabbling into it. Now, we had fallen to the 200-day and kind of bounced around there, as you see with this red line coming through here. And then today, like I say, it tanked 5%. I just don't think 5% is warranted given the nature of it just being an analyst, because as they say, an analyst is great at predicting the past. So I don't think you just believe what they say, and we'll have to wait and see when their next report comes out here in April, whether or not what they have asserted is true. But like I say, I went ahead and jumped in there. I bought the April 20th 155 calls. That's a bet that it's going to bounce back up to at least to test these lows. I think it ultimately rallies higher, maybe say 160, 162 to test this 200-day. But it will probably consolidate for a little bit. And looking at a weekly chart, you can kind of see why I think that it's kind of broken the chart now. So it'll have to work off some of this selling in order to move back higher. But I wanted to go ahead and step into it. Like I say, I jumped in here whenever we retested the low of the day, and that low was fractionally lower, but now we've since held on to it. So We're about to get a buy trigger here on the 5-minute chart with the moving averages and the swing highs. So I think that it's okay to go ahead and start dabbling into this one. Maybe buy, a quarter or a third or a half of your position and then wait for it to settle for a couple more days or weeks even, before you pull the trigger on the rest. But I do like McDonald's. I think it's a good buy right here, right now. One of the other ones that I put on, I'm just going to check over here on the thing. I'm trying to keep these in order for you. Oh, UPS. So UPS, we had talked about, we bought it the other day. We had kind of bought a expectation that it had been a little bit overdone, and so let me pull out here to a 1-year chart and we'll kind of see why. So we could tell it was building this nice base of support right in this $104, $108 area. You can see it just pretty much went range bound and just traded through here. So I think this is the level you buy against, and so I had bought against that 105, 104 level. Yesterday the shares got a huge rally, and it was not really. This is kind of shows it to you. My position was actually via options, of course, and they were underwater. But then all of a sudden, I don't know what sparked this rally, but all of a sudden we had all these major buyers come in. It rocketed off the lows open of the day and went way up. And so whenever we were testing these highs, and it started acting a little wonky, I went ahead and jumped out of that position. I didn't really want to, but I felt like it was prudent given the profits I had in it and the way the stock was acting. As it turned out, that was a very good idea. So I ended up cutting out with a 20-something% gain. And today that share's back, or that would have been underwater. So I'm glad I went ahead and took profits. So I let that settle out this morning, and then I went ahead and jumped into it. I've already made 2 purchases actually today, and the same thing. I kind of thought it might act a little funny, so I kind of, whenever I saw that this thing was starting to get a little bit of a rally, I went ahead and just bought a small position, thinking it may pull back, and it ultimately did. So I went ahead and added to the position, and that's looking at a nice little gain already today. So I think you can buy shares of UPS, especially from a longer term perspective here. Looking at the weekly chart, this level, like I say, has been critically important for quite some time, and you can kind of go all the way back over here, and this is going back years and years to this level. So this shows you why this level is important. Resistance here, resistance here, resistance turned support, and then support failed, so it acted as resistance again. On numerous occasions, once we finally were able to take it out, it came down here and tested support for several weeks, and now we're doing it again. So like I said, I think it ultimately holds. If this level does give way, then I would be watching out below, and then I think that really kind of opens the door for, say, 90 to 95 area. But I think that right now you got to trust what you see here, and you buy against this level right here that it's been demonstrating to be important. So UPS, I think it's a great name to be buying for a long term. I don't think Amazon or shipping needs are going to diminish anytime in the near future, and from all I can tell, everything's just going to get it's going to become a huge business as time passes. Not that it's not already, but with Amazon's and now even like Walmart stuff becoming so focused on, e-commerce and free shipping and 2-day shipping and all this kind of stuff. UPS and FedEx, those 2 guys are going to be the one to profit. I would say the post office, but they can't profit from anything apparently. So FedEx is a little bit stretched, so I would rather be in UPS. I think FedEx is probably the better ran company, but at the same time, they're both well ran. So I feel like that at the risk return right now, so FedEx is giving you less than 1% for a dividend. UPS is about 3.5 or so, yeah, so 3.4. So I think you get a better dividend, you get a better valuation, and you get a better technical picture because it sold off so hard here lately. So I think you go ahead and buy into UPS as well. Some of the other trades I wanted to update you on, I jumped into Comcast the other day. This is a little play against that news rumor that they were going to buy Sky Holdings, and it kind of dropped. It acted like it wanted to start rebounding, but it hasn't yet. So I don't think I don't know if that trade's going to work out. I did buy plenty of time. I went ahead and bought out to May, and I bought the $40 calls, so that's way up here. So that may work out eventually, but we'll see here in the next few months, I guess, in a few weeks, whether or not that does happen. So let's see here if I got anything else. Oh, Roku. I wanted to give you a little update on that one. That was one we had talked about, and we had been watching this $40 level here because we had discovered that it had been a critical level for quite some time. So let me find it here. So $40 is right through here. Again, same kind of situation as UPS, was resistance, then it acted as support, and then support, and then it took off from there. It came back down and tested as support, support. But today it gave way, so that's a big uh-oh, and that's a big kind of red flag. Now, one thing I will say is that so far the volume is very, very low, so there's a very good chance this thing recovers back above it before the day's end. But the fact that we have now decidedly taking out this $40 level, I'm jumping ship on this one. I'll be looking to re-enter it maybe on a pullback to say the mid 30s. 32, 33 area, but for right now I think you got to stay away from it because it has violated our support level, and therefore we do not want to be with that one. So you know, and this is probably going to ultimately be a company just like Pandora or Zynga, and it's going to tank over time. I mean, I don't know how they're going to remain profitable. It might be a buyout candidate, but I think that just for the short term, you got to stay away from Roku. Pandora trade still not working out. It's starting to get a little rally today, but again, it's not going to really work out. GE, it is pissing me off, to be honest with you. It has held our support level or our stop loss level, so we were talking about the 14 area being kind of where we wanted to watch, and it has sunk right to that 14. I think it actually set a penny or two lower. Yeah, so the 52-week low ended up being 5 cents short of 14, so I think we got to stick with that as our stop loss. I mean, if you had it at 14, you got stopped out, I think you can buy it back. I mean, I'm not, you know, that's one of those little things that sometimes if you decide on a level that you want to be as your support, give it a little bit of wiggle room. So if it's 14, say, you know, give it 13.75 or something, just to give yourself a little bit of room, because they never move directly to that level and then stop like on a dime. So but in any event, I think you can still be with GE. I think you can still buy it. It's a decent dividend. There's a lot of headwinds for GE, but I think most of that is priced in, as shown here on this weekly chart. It has essentially just tanked. And if you kind of think back from years and years, I mean, this thing was up at $30 and now it's up at 15, or down at 15, so, or less than 15. So this thing has gotten chopped in half. So I think it's about priced in, it's baked into the cake, so to speak, of what all the bad news is about GE. So I think you can still be with it and still be buying it as a longer term play. So I'm still with it. I'm still owning my, let's see, what is it I have here? I have the June $10 calls. So that is an in the money call. So it is pretty much trading in tandem with the stock, and the stock's up about 1% right now. Another one that I wanted to mention real quick was Mallinckrodt Pharmaceuticals. MNK is the ticker. This is a very cheap valuation company. It is listed abroad. It is, you know, PLC is a publicly listed company, so that's the equivalent basically to our incorporated here in America over in Europe. So I jumped in a little bit too early. I thought it would hold, but it didn't. And like I say, I bought, I think, right here on this day after it had kind of tanked, and it started to act like it was going to work for me, but then it just kind of reverse coursed. Oh, no, I'm sorry. I'm looking at the wrong chart here. Yeah, so I bought in right in here, and then it started to act like it wanted to move up, and then it kind of eventually tanked over. So I think now you can buy it still. I bought the 22.5 calls, but I think you just can buy the stock or the calls, or however you want to play it. I think you're okay. I think the valuation is very compelling at these levels. Like I say, we're showing support being pretty solid down here in this $15 area, somewhere in that area. So I think, let me see what the low is here real quick. Yeah, so $15, call it. That would be a good area for your stop loss, or maybe $14.75, like I said a second ago. But I think you can buy MNK. It is, like I say, very cheap. They earn pretty good money, and you know, rightly or wrongly, their products sell themselves, and they're a big part of like the opioid situation and all that kind of stuff. So there's a little bit of a stigma around it in that sense, but even so, they still crank out the cash. I think you can buy MNK here. All right, guys, I'm going to hop off here for right now. If I see anything else major pop up today, I will let you know, of course. Oh, let me give you one other one real quick. This is kind of a speculative position, but I like it. I think it's done well. They just reported earnings. It was pretty solid. MBR, Neighbors Industries, it's a oil and gas play. As you know, that's been a terrible industry to own here lately. So, you know, it's starting to show some signs of stabilizing. Now, this 550, this is like I say, this is a speculative company, so it's pretty cheap. But this 550 level here had been a critical support. It rallied from it after testing it 4 times here, it looks like. And now we're holding the 650 area. I bought the 650 calls the other day when it was trading about 6.25. And I will probably add to that position today because it's actually lost a little bit of value just given the time. But I think that you can buy into it, and it is, like I say, not very expensive. I'll have to give some work together as far as the actual earnings. They lost money this previous year because of the tax changes, so that's why it shows a 0 PE. But like I say, you can see here, and it's pretty obvious, or it should be anyways, that this is some serious volume right here. And yes, there's some serious selling going on with some of these other ones too. But ultimately the buyers are holding in there and stuff. So The 610 level might be an area to kind of watch from a short-term standpoint. I think the 550 area is a little bit more important longer term. Whether or not you write it down there is up to you, but I think you can buy this one from a long-term play on the oil and gas industries. Okay, guys, I will be back with y'all here in a little bit. I hope y'all are having a good week so far. This has probably been one of the best weeks I've ever had. I told y'all to bet against this thing, and I think that you know, we've got to continue doing that. Like I say, if you have some profits you need to take in the short term, that's fine. But longer term, I think you stay bearish. All right, guys, talk to you later. Bye-bye.